This presentation will be about budgeting basics when it comes to sports, recreation, and the tourism industries. First, we'll go over terminology and standards. When we think about processes in budgeting, we need to make sure that they are standardized across all levels. So, whether we're gathering financial information on revenue and expenditures, organizing income and expenditures, working on reporting, managing the budget, and making sure it's consistent, we need to make sure we are in compliance with approved budget practices, these standardized processes. Let's take a look at processes and terminology as well. Budget preparation, reporting, and closeout processes are standardized by a governing body or by accepted accounting practices. In most cases, it's both, and these will change depending on your field as far as what kind of organization you're running and how your field is organized, whether it's governmental, nonprofit, and so forth. Within each of these areas, the terminology that is used in budgeting may be similar, but also may vary slightly within organizations or within fields, and you need to be up to date on how those terms are used across different areas. Next, we'll talk about constructing the budget. And you got to remember that there are some challenges when you have incomplete information, whether it's gathering information that exists or getting new information that does not exist. But overall, our first step is to gather all the information we can related to our expenditures and revenues or income sources. Let's look at some categories within the budget. First category would be personnel, and we're going to break this up into several things here. Personnel can be broken up into different areas as far as salary. So we can look at part-time employees, full-time employees, part-time seasonal, so they're part-time only for a short amount of time, permanent part-time, so they're working 10 hours a week, but they're permanent, and then contract employees, which is per task or per job. Then we can break it down into different functions, so we can look at it as a function budget where we're looking at aquatics, sport, recreation center, maintenance, and so forth. After each of those, we need to subdivide it into the type of position. So within function, if we're looking at a recreation center per se, we can look at a sports manager, a sports official manager, field maintenance staff, concession staff, and so on and so forth. Here, we'll look at this as far as the graphic is concerned. You can see that the level 1 category breaks it down into full, part, or seasonal employment. Level 2 could be the position. So we have lifeguard manager, so on and so forth. And then level 3 is a type within that level 2. So if we went from seasonal to lifeguard, and then we had different types of lifeguards, you can see that going on there. Then we'd look at operational cost, and these can be equally challenging. We want to look at the past to anticipate the future and all our costs related to operations, and we'll talk a little bit more about that in a second. We want to look at the lifespan replacement costs for non-capital equipment. These are going to be things like a computer monitor, a stapler, stuff like that. We want to look at increase in cost of purchases that are anticipated and not anticipated. So this links back to the first thing is what can we anticipate overall as far as increases or decreases in price. So sometimes we can get better at our processing and decrease the cost overall. Sometimes certain utilities or fuel or equipment that we can anticipate the price is going to increase. Then we're going to look at planned new purchases of all non-capital expenses and try to map those out as far as replacement costs, like we replace laptops every 3 to 5 years or whatnot. In general, I like to break up operational cost into 3 categories. Operations overall will include supplies and concession items and stuff like that. Then we can look at utilities, which include electricity, water, internet, telephone, sewer, and so forth. And then maintenance. And this is really where operations and maintenance is a little bit separate. Maintenance is to repair or replace things that need to be replaced. So instead of just ongoing things, like when you think about supplies, you think of like tape, rubber bands, staples, so on and so forth. And maintenance is really about, I need to replace this to keep it functional. I need to reseed the grass to keep it grass on the field. Really, when we think about essential information regarding the budget, It is the information that allows the manager of the budget to predict or project specific costs. So we're talking about that anticipation overall for an activity, program, maintenance, operations, replacement, and so on and so forth. So some things we can anticipate. We know that some things will increase or decrease due to inflation or deflation. And then some things we can't predict, like recently there was a spike in the cost of lumber. Lumber tripled or quadrupled within just a short amount of time. And there's no way would have really predicted that. All right, let's take an example here. We're going to call this Program A. What we don't know is the total cost of Program A, so this is going to be considered new budget information. What we do know about Program A is it's going to meet for 6 weeks at 3 hours per week. And then as one instructor, it's going to cost us $11.50 per hour. So basically what we're looking at is 6 weeks times 3 hours times one instructor times $11.50 per hour. And what we'll get is a total cost of $207. So this will give us an idea of about how much this new program will cost us. And that concludes the terminology and standards part of our discussion here.